Most traders enter trades either too early, too late, or they hold for way too long. And on this gold trade, I locked in 485 pips, which is insane. And it wasn't because of luck. It was because I followed a simple process. And in this video, I'm going to break all of that down. I'm going to show you what I saw before I entered the trade, how I managed the trade, and then also what I saw that made me exit the trade. And I'm going to do all of this so that way you can start thinking like a real professional trader and start profiting from these markets. So now, if you've been struggling with consistency inside of the markets and you feel like you're just really close to getting it, then this video is going to be for you. I know what it's like to work a 9-to-5 job and basically try to make some extra money on the side. Trading can feel overwhelming because there's charts everywhere, there's all these lines and indicators and 100 different strategies on YouTube of people telling you to do this or do that. And I know that, yes, I'm another person on YouTube. However, if you've been following my analysis for the past couple of years, you know that it plays out. So my goal today is just to cut through all of the noise and show you exactly what I did for this trade by giving you a step-by-step breakdown of what actually works inside of the market. Oh, and this is the other thing too. I don't want you to just watch the video. I want you to be taking notes and not just note what I did, but why I did it, because I'm going to be explaining those details as well. So if you're following along, this is going to help you be able to understand what it really takes in order to get consistent gains inside of the market and not just getting a gain here or there. It's going to be because of the repeatable system that I use inside of my trading, and I also teach the people inside of the Profitable Traders Academy. All right, so first inside of this market, let's just go ahead and take a look at what I saw when I was entering the trade. So the first thing I like to do is I like to start on higher time frames. So I started, well, this is the H4 because I don't have any screenshots of at that time what I was looking for on the daily, but essentially if you just count the candles, essentially like all of this, for the most part, there is six H4 candles. So 1, 2, 3, 4, 5, 6. So pretty much we had this candle that was the previous day, and it looked like price was bearish. But looking at the higher time frame, the thing that I saw that made me want to even look for a position was the fact that we have some previous market structure inside of this particular market. And so looking at price action right here, we can see that in the past, price did spike up before pushing down just a little bit. Now, this wasn't just a complete push down. It was basically forming some sort of higher low inside of the market. Then it pushed up, and then it started to do all this craziness where I was trying to find some trades, and I was able to find some successful trades inside of this market. Some of them were not successful because this is super ugly price action, but I was content with the gains that I had made from the market, even though it wasn't as much as I wanted, and I was still strong with the bias that I had. My bias for this market was bullish, and I got that from the daily and the weekly time frame. And if you watch the chart with me videos, you know exactly what I'm talking about in terms of what I'm looking for when I'm looking at these markets. But this is going to be a specific trade that I'm going to break down step by step, which is why I'm giving you all of these details right now. So like I said, I saw this right here, so I knew that after price did all of this, there was a chance that price could retrace. So looking right here in this zone kind of lined up with what happened over here. This is where I was looking for the trade. And then at first I was looking for a trade down here, but that obviously didn't play out. So I was looking for this right here. So looking really closely into this area, so let's go to the next image, and we can see right here, yes, I'm tracking this on the 1 minute, but I was mostly looking at these higher time frames. So on the H1 time frame right here, we can see that price was, when it got to this zone, it consolidated a lot. And I entered this trade initially on my test account. So I have a smaller account. You will see later in the video what I'm talking about, but I have a smaller account where I was confident in the level, but not confident enough in order to put a lot of money behind it, because as you can see up here, this was also a level. It started to play out a little bit before selling off, and I was actually in a trade here. Thankfully, I did close when I did. Otherwise, it could have been really bad. But looking at this zone right here, I knew that there was a stronger possibility of price respecting this level based off of, like I said, those higher time frames. So found the area here. I did enter right about here. This was close to when the market reopened on this particular day. It was actually a Wednesday, or actually was this the 20th? No, this was the 19th. So this was on a Tuesday. So a Tuesday night, basically. And I entered the trade. And then once I got more confirmation that this price was going to continue in the direction I wanted it to, then I risked a lot more. So total on this position, I risked, let's see, $650 on this particular trade. And if this sounds like a lot to you, don't worry, because I started off trading $5 for each trade and then just gradually scaling up over time. And obviously I'm looking to scale up even more, so that way I could be able to get larger gains inside of the market. But of course that comes with experience. So let's just go ahead and go to the next slide. So here is the chart that I took a screenshot of for the larger account. You can see exactly where I entered. So on the second position, basically this was on the 1 minute. Now I don't generally go on the 1 minute time frame. It's just because in this time there was a lot of volatility in the market. Basically price was just zigzagging back and forth, and it was really hard to analyze on higher time frames. I had to go on this lower time frame in order to find the move that I was looking for. And then once I saw this really strong candle right here, I knew that it was time for me to enter the trade, and that's when I entered. So here is the other account, the test account. So on the last this account, I risked a 0.5 lot with a stop loss of 100 pips, and then this one I risked also 100 pips, but I used a 0.15 lot. So you know, this amount, I believe this was about $150. I was okay with losing that if the trade didn't turn out, but obviously it did. So I actually entered this trade, it was after this, so it was somewhere in here. Or actually, let me make sure I got this right. No. So one thing, like, this time is not US time, it's some other time. I forgot what time zone it is, but basically this little gap up, I think it was sometime after that. So anyway, entered the trade around this zone. You can see that I entered here, and then here's some information down here. And then next, you can see that the trade is in motion. So I did experience quite a bit of drawdowns. Like I said, here's that little gap, and then I entered somewhere along there, and then price just did some crazy stuff. So that's why I was glad that I didn't risk a whole lot. But as you can see, this entire time I was maybe about 50 or so percent in drawdown, so I still had a lot of room before my stop loss was hit. But still, you know, as you enter a trade and you're trying to see kind of how it plays out, you just want to monitor it. I mean, obviously I can't scare the market into doing what I wanted it to do, but just waiting, sat through all this. So you can see this was just hours of just consolidation, and then finally it had this point where it was trying to break out, but it really couldn't, and then it tested here, and then finally it broke out. So then that's when I started to look for my other position with a larger account, and you will see here on the next slide. So here is the 1 minute. You can see the first position was already in play, and then sometime after that strong bullish engulfing candle that I showed a couple of slides back, where I entered the trade. And of course, as you all know, as soon as you enter a buy, the price tends to sell off. It's just the thing. I don't know why. But anyway, enter that buy, start to retrace. But notice how this did not retrace hardly at all at this, or for the second position. It barely retraced. I had all of this room to the downside, and you can see much more clearly here over on this 15-minute chart that I have. See, 15 minutes. So this 15-minute chart, where basically you can see I entered the trade after here, it went down, and then I had all the extra room, and then price started to push up. So that was really cool that I had all this extra room here on this larger amount that I was risking on this particular trade. So I even went down to the 30-second. So normally I don't do that either, but I just wanted to see how price was unfolding because I wanted to gauge the momentum of the market. And as you can see here on this H1 chart, now this is close to when I'm looking to exit, and I'm looking to exit this trade for a number of different reasons, and I'll get to that in a second. But basically, while managing this trade, essentially what I like to do is I like to set a stop loss. So basically just trail my stop loss. So essentially what I like doing is once I get to like around a 1-to-1, sometimes I'll move it to break even, but I don't always do that because depending on the time of day and a couple of other factors, like if I set it to a 1-to-1, I could get stopped out and then price could continue to go into my direction. So that has happened to me a number of times. So I do have a couple of different methods depending on mostly the time of day and then also some other things that I look for inside of the market. In this situation, I really didn't have to do that all too much because there was a lot of momentum inside of this market. So another thing I want you to be aware of is that once price got into the zone, even though it was basically at a strong support, I didn't just enter the trade just because it got there. I was looking for certain candles and certain price action. And I talked about that before, but I wanted to emphasize that because that's how I trade. I look for multiple confirmations inside of the market, and it was candlesticks. It was at a strong support level. And then I saw that on lower time frames that price was making bullish market structure. So that gave me the confidence to enter the trade, the first trade, and then even more so the second trade for sure. So the key with looking for these entries are basically just having a lot of patience, because a lot of times traders jump into the market because they don't want to miss the move. However, jumping in too soon, as you probably already know, it could cost you a lot of money, and you just want to be extra patient and making sure that whatever confirmations you look for inside of the market are actually there. So typically I like to look for 2 different confirmations inside of the market, and 2 is usually good enough. Sometimes I want to have more, it just depends on the market dynamics. In this situation, I definitely wanted to have at least 3 because of all of the volatility and this ugliness in here that I experienced. I did have some gaining trades and then also a couple of losing trades in here. It kind of sucks being able or holding a position and then getting stopped out. So it's like, come on. But you know, it's just the market and the way that it works. It doesn't care anything about your feelings or what you want to work. That's why having structure and having a system that is profitable is going to be the best in terms of finding the level of success inside of the markets that you're probably looking for. If you're watching this video, you definitely want to be successful, and that's why I'm sharing this. I really don't have to, but I want to because I know that it's going to help. So going back to managing the trade, that for me was when the real work happened inside of the market. Like I talked about my stop loss, I already knew that I was going to risk 100 pips for both of the positions with a 0.5 and then a 0.15. That's a total of 0.65 lots inside of the market, risking $650 inside of the market. And that's obviously not a low amount. I mean, it could be depending on your account size, but for my account size, it's actually a nice amount. So it's not really a big deal, but sticking to a fixed lot size, a fixed stop loss, and then also knowing exactly how much I'm risking inside of the market, it really helps me take a lot of that emotion out of the trade. Because if I'm putting on this amount of risk, then I just assume that the money is already lost once I hit that buy or sell button. So that'll come with time. It definitely wasn't there in the beginning for sure, but that has been something that has helped me quite a bit, be able to manage my emotions inside of the market. So another thing, so you can see that in this particular slide that the price is approaching this resistance level here. And this was a huge part of my trade and risk management before putting on this trade, just identifying this level. So a lot of times traders think that they need to hold everything to the top. And I used to take partial profits. However, I don't. The way that I manage my risk now is I lock in profits by moving my stop loss. So I talked about that 1-to-1. That's usually what I'm targeting, but sometimes not. Just depends on the price action. I don't want to like go through all this drawdown and then price get up to here only for price to come back to my entry, because I've had that happen, and then take off. So that's, you know, something that I think about when I'm putting on trades, but I just basically just manage my trade by looking at what the market is doing and then just moving my stop loss accordingly. I don't quickly move it into profit as soon as it gets to a 1-to-1 because I don't want to possibly get stopped out if it's not necessary, if the market isn't giving me signs that I need to move it up so high. So anyway, just giving it a little bit of room to breathe basically is what I do inside of the market. So another thing I did was to watch the volume volume. So if you look at these candles right here, these have really low volume. But basically looking at the volume of these candles, so zooming in quite a bit, you can see that these bearish candles were really strong volume. And then you have like these little tiny candles right in here. They're basically indications of not much momentum inside of the market. Because of this gap up, I felt confident in entering the first position. And then I got this really big candle. So I'm like, okay, there may be some volume. Then I saw this one. I'm like, I had to go down to a lower time frame to see what the volume was like there. And then as you can see, big candle, tiny candles, and I was pretty much asleep during this time. So I let this position run while I was sleeping. And sometimes that can be scary because now I tell myself either I can wake up to a gain or be in a lot of profit or get stopped out. I mean, that's basically the two different scenarios. And before I put on a trade, I knew exactly what could happen. So when I woke up in the morning, I saw all these tiny candles, but I was in a lot of profit, and I saw these really big candles. And then I also noticed that during this time that there was a New York volume coming in. So that contributed to these really big candles, really big candles. So the fact that I knew what I was looking for and I was monitoring the volume on these candles, I was able to go to sleep comfortably. Now, sometimes I do like wake up and like look at the charts, and it's like I'm not setting an alarm. I just pop up. Okay, let me look at the chart. And I don't know, that just happens. But for this particular trade, I slept soundly. I was actually very surprised, but I had a lot of confidence going into this position. So you can see that it played out nicely. And a lot of trading in this way where you calculate your risk and you have a set plan and you know exactly what you're looking for when you enter the market, and also managing the trade is huge, because I wasn't sitting in front of this chart all night. I went to sleep. I got my, I don't know, maybe like 6-7 hours of sleep, and I checked once I woke up. And like I said, all of this volume was in play once I actually woke up. So that makes sense. And then also I want to share that managing your trade is about discipline, not necessarily trying to predict. I know sometimes I try to predict, but at times that's just futile because you don't really know what the market is going to do. You may have a nice setup or quote A+ setup, whatever that may be, and the market can still go against you. So it doesn't care about you and your plan. It's going to do what it do. But I know that if I have discipline behind the decisions that I make, and I have a structure that I follow every single time, that more times than not, I'm going to be successful and I'm going to be profitable if I stick with that plan. And that's the number one thing that I teach inside of the Profitable Traders Academy, just my system, what I look for, and then giving people real-time feedback inside of the Profitable Traders Academy, and then also looking at their charts, and then also giving them their charts back with feedback within 24 hours, so that way they could go ahead and use that information to be able to make smart decisions inside of the market. So when it comes to exiting this position, as I showed on the other slides here, I'm getting really close to the area that I want to exit, mainly because of this resistance level over here on this H1 time frame. Like sometimes I'll use a H1, sometimes I'll use a H4. It just kind of depends on what the market is looking like at that time. But in this situation, because of all of this chop, I wanted to analyze the H1 time frame and find the next resistance level, and that's exactly where price went. So let's just go ahead. You can see it tapped right into that. At some point my alert goes off and I'm just like, okay, it went beyond where I wanted to take profit at. So let me look at price and how the candle's going to close. And I think with this screenshot, I think it may have been a couple. Yeah. So I wanted to wait and see how this candle closed, because there was 1 minute and 48 seconds left before this H1 candle was going to close, and I want to see how it closed. So next one showed it closed rejecting this level. Basically it had some exhaustion to the top, and I was just like, I don't think I want to wait and try to see if price gets up here and try to get some more money out of the market. Now eventually price did move up, and it did hit this zone, and then it went beyond. So I didn't want to be greedy, and basically what I see here was that it shows me that momentum in that direction was slowing down. So instead of trying to hit for something up here, which eventually price did get up to here or around here, I didn't want to take that chance because I already had some profits inside of this market. And with roughly at this point I had a little bit more than 485 pips inside of the market. Looked at this as my job isn't to get every single point outside of the market. Like, it would be great to have a perfect entry, perfect exit, and I've had a couple handle those occasions inside of my trading career, but it's not every single trade. Is actually very rare. And my goal here is to grow my accounts consistently. So not be greedy, take my money, and I closed the trade and secured that profit. And then I just moved on with the rest of my day. I actually had a great day because I had already made, at this point, I'm going to show you a little bit, some money inside of the market. And that is the mindset of a professional trader. You take what the market gives you and then you protect your capital and then you live to trade another day. And basically you're just waiting for the next clean setup. So when it comes to looking at all of this, actually before I get into that, here are some other, some other time frames. So here's a 5 minute. So this was right before I closed the trade. And then right here on my other account, the tiny account where I risked 0.15, getting to the point where this is right before, actually getting close to when I was getting ready to close the trade. I don't have anything right at the moment because it'd be kind of hard to close and screenshot, but this is really close. And as you can see the result here, you can see the entries and the exits here for this particular trade. This is on a larger account, so basically 225 pips inside of the gold market. And then here is the other account, 259 pips inside of the market. So when you add all this up, it's 285 pips inside of both of these markets combined. So that's actually super cool. And another thing I wanted to mention was, I know that some of you may be watching this and be like, okay, cool, all of this made sense, but I still don't feel confident in doing this on my own. And this is exactly why I created the Profitable Traders Academy. I help traders trade step by step through live mentorship, trade reviews. Like I mentioned before, you get your charts marked up within 24 hours. So that way you can make decisions inside of the market with a fresh perspective, with my perspective. It's almost like I'm there trading with you. Or in all of this, you get a clear system. So that way you don't have to figure out things alone. And that's one of the things that people actually say about being inside of the Profitable Traders Academy, that they weren't expecting to get this much help at the price point that it is currently. Of course, it's going up, but they weren't expecting to get all of this help. They were just expecting maybe some videos and that would be about it. They weren't expecting me to give them live feedback on their trades and then also get feedback on their charts as well. So that way they can know if they're on the right track before they even press that buy or sell button. So this is what I want you to do in order to take your trading to the next level. If you're serious about building a skill that helps you generate potential income in addition to your 9-to-5 job, schedule a call with me. And what I'll do on that call is I'll walk you through what we do inside of the Profitable Traders Academy. And if we both think that it's a good fit, then you could join the program and get the level of help that you're looking for at a super, super affordable price, which is why I am increasing it. I've seen programs that are like 10K and more for the level of support that I'm providing. So when you click on the link in the description box below, you'll see that it's nowhere near that. And if you want to get more information about the other things that are included, then go ahead and check out the link in the description box below. That is the official link. So I'd be happy to hop on a call with you. And don't just stop here. If you want to see how I break down the gold market before I enter trades like this, then go ahead and check out one of my latest breakdown videos. You will see it in one of these boxes here on the screen, and I'll see you there.